Welcome everybody to another edition of the Prague YouTube channel. And please remember to subscribe if you haven't done so already. Just press the button in the lower right-hand corner. Well, I'm privileged this morning to talk to, is it Dr. Chris Hart?
No, not doctor, but certainly
Mr. Chris Hart. Mr. Chris Hart, he's currently a market strategist at Impact Investment Africa. Have I got that right?
Yes.
And he's a former global market strategist from Standard Bank and one of the country's more well-known economists. Well, good morning, Chris. Glad to be talking to you.
Good morning, Dan. Yes.
Well, this past week, we've seen a huge move in the dollar-rand exchange rate. Would you describe it as a crash?
Well, I think it certainly is crash mode when you actually look at a chart of the rand, anything like in 2001, very, very similar, where the rand weakened incredibly, to incredible extent over a very short period of time. The 2008 rand crash then, and certainly we are looking at another crash now. A few years ago, we also had a crash that's just ahead of the replacement of the finance minister with Desmond van Rooyen by the former president Jacob Zuma. So we have had crashes before, and this is certainly looks like another one of them.
Okay, well, let's just try and bring up a chart of the rand right now. Do you see it there, Chris?
Yes, very much so. And as we say, we can see in the 2009 area, we had a crash. We had another one in 2006.
Yeah, this was the point where it also weakened significantly there from about 7 Rand to 11 Rand. Yes. And then it gradually strengthened down here to 7 Rand in 2011, mid-2011. And then we had that was under the Zuma regime, and it went right from 7 Rand to almost 17. And from there, it gradually strengthened back. And after, I think this was the point where Ramaphosa was appointed, and then it dropped right back to below 12. It was in the 11 Rand something.
Yeah.
And we've
That's
seen,
right.
Since the beginning of the year, it went from just about 14 Rand to the current 19 Rand level.
Yeah.
So, Chris, how do you explain this huge move in the rand?
Well, the movement of the rand in let's say since the beginning of the year, where it was 14 to the dollar, it started the year at 14 to the dollar. It's now 19 to the dollar at the close. We've basically seen a combination of factors. One is that the new Minister of Finance, Tito Mboweni, delivering his budget, I think very clearly reflected that the country really has been hollowed out. It's extremely weak, in an extremely weak position at the moment. The credit rating agencies have downgraded South Africa. Last night, I think Fitch downgraded South Africa again. And when Moody's downgraded us, they didn't downgrade us into junk and then kept the outlook at neutral. It actually kept the outlook at negative. And one of the contentions I've always had is that the downgrade by Moody was already priced into the market. What wasn't priced into the market was further multiple downgrades. Fitch already had South Africa in junk. They downgraded us another notch and kept the outlook at negative. And that is the concern, is that the reasons for South Africa going into junk have not gone away. If anything, the government has doubled down. In the case of Moody's, for instance, they literally gave South Africa a few years actually, as a chance to keep us at investment grade. They gave us several years where they actually stood out against the other rating agencies as the only one still rating South Africa as investment grade. And South Africa didn't.
Yeah, it seems that Moody's, they were so, as it were, tolerant of South Africa, and they gave us so many chances to actually improve, but we just didn't.
We led them down the garden path, and I think it started in 2008. We had the global financial crisis, and the point about the global financial crisis, it was global. It hit every single country. So the problem is that the global financial crisis was a cover for effectively what was happening internally. And internally, what had happened is that we had what I call was the second watershed in South Africa, where the first watershed was the unbanning of the ANC leading up to the 94 elections. We then had almost a decade of the country settling down, consolidating, and in fact making good progress. The debt to GDP ratio, for instance, had come right down to 20% in that time. The growth rate was higher than the population growth rate. The unemployment rate was coming down until 2007, 2008. And I can remember very well, because in the 2000s, I know I was one of the most positive economists, most optimistic economists in South Africa. I was one of the only ones that actually forecast multiple years of rand strength following the 2001 rand crash then. And that was on the back of an emerging market boom. And that certainly is well in the record. But it happened in 2007, and I can remember it to the day, because it didn't affect anybody and it didn't really bother too many. It was a sort of like raise an eyebrow event, but in fact it was the start of the second watershed, and it was the day that the National Prosecuting Authority decided to drop the charges against Zuma, because that was a critically important thing, because effectively it then turned, it gave the top political leadership impunity, right? In other words, nobody's now equal, not everybody's equal before the law. Who gets impunity? Obviously that is an ever-expanding circle. And to keep the charges away, you had to break and destroy every single institution of state that made the first watershed so successful. So the prosecuting authority is in tatters, SARS is in tatters, the state-owned enterprises are in tatters, although I would say a lot of these factors were already, you could say, in play beforehand, because South Africa never ever went ahead of the global average. Through the 2000s, we actually met the global average, but we never ever met the true potential of the country, because we've still got this creeping socialist type of thinking that's dominating economic policy. And so 2008 proved to be a switch. The ruling party got rid of Thabo Mbeki and replaced with an interim McClunty as a president, and then Jacob Zuma assumed power subsequently. And you can see by the data that it was a switch turned in the economy. And the 2008 really just proved to be a cover. What happened is that the rest of the world rebounded after 2008. South Africa had a weak rebound and basically has been growing at below the population growth rate for most of the time since 2008. And with the high and unemployment has been rising again. So we're back at we at 29%. We were coming back basically from 21, 22%, which is still extraordinarily high. It's an unusual situation, and basically the unemployment rate is already an indication that we've got regulatory failure. We are unable to attract the investment into the economy, and it's part of it is this policy called Black Economic Empowerment, which is probably the biggest contradiction in terms, because effectively the policy is about economic transfer rather than economic growth. And that's the big problem that we have. We're looking at what we have in existence in this economy already and seeing how can we transfer that, right, rather than actually look at what I call the solution to the actual problem in South Africa, which is what still needs to come into the existence. And I take an example, if you go back almost a century when, in the wake of the First World War and the Great Depression, is that Afrikaner economic empowerment never was to look at what the English business was, if we could tar that as a broad brush and say, we want that transferred to Afrikaners. They looked at, let's say, Old Mutual, they set up Sanlam. You had Barclays Bank, you set up Volkskas. In other words, the empowerment at that time, and one can argue about these things, whether it worked on, whether it's really super optimal policy and not. But basically what happened is that the economy actually grew under those, under that kind of empowerment. We do not have that in South Africa. And basically we've got an economy that needs to create another 12 million jobs. 16 million people work and 12 million people need to actually get jobs. If you actually normalize things like labor participation rates, etc. So it's not what exists in South Africa, it's what needs to come into existence that is not there, all right, that we need to actually create. All the buildings, all the roads, the opportunities are absolutely phenomenal. We have to double up on everything and it still might not be enough. And this is where the mindset then starts to boggle, because one of the biggest problems we have, and this is where the thinking is so inbred and counterproductive, is it starts almost with National Treasury. When you go to a conference and you listen to somebody from National Treasury, most people in the audience would say, I wish more people in government would think like this. Instead, National Treasury is probably at the core of South Africa's economic problems. One of the hassles, and where I got into trouble at Standard Bank is when Provan Gordhan replaced Des van Rooyen after a few days as finance minister, I criticized that. I have an enormous amount of respect for Provan Gordhan as a very, very capable person, but he was the finance minister that took South Africa into junk. Now, we need to understand this. At the beginning, in 2008, we had a lot of flexibility, but obviously the global financial crisis put the country in a problem. So what happened? We had this increasing Marxist socialist type of thinking coming into the budget. And every single budget would prove to, that was put down was an anti-growth budget. And the commentary, largely when you listen to it, it's this sycophantic sort of difficult thing under the circumstances and all the rest of it. But when growth is your problem, you cannot have anti-growth budgets. Now, what do I mean by anti-growth? Is that firstly, to bring new economic activity into existence, you have to have investment. You can always add something to that, but it's investment, maybe investment plus technology, investment plus skills, whatever, but you have to have investment. And the resources that you need to generate for investment is savings. So at the base of this, you need policies that support savings and you need policies that support investment. If you don't have that, it doesn't matter whether you've got a communist government, Islamic economy, it doesn't matter what economy you do. If you don't understand that you need investment to bring new economic activity into existence, then everything else is noise. And the previous Minister of Finance to Provan Gordhan, that's Trevor Manuel, introduced probably one of the most insidious, destructive taxes that he could ever have dreamt of, and that was called capital gains tax. Right? We should be actually, there is no emerging market that can actually justify a tax of that sort, because effectively you are taxing capital. And
yeah, and in a, sorry to interrupt, but in a kind of a weak currency environment like South Africa, it's fine. Say if it's in Switzerland or Germany or something where you've got a very strong currency. So if you've got a 20% gain in Swiss assets, I mean that's a real gain. But in South Africa, where the rand's weakening all the time and being eroded by our inflation, then you've got an automatic increase in the nominal value of any asset, and then they want to tax that.
But I think what I'm speaking about is that if you need capital for investment, when you tax capital, it's like eating seeds and then wondering why the economy is not growing. All emerging markets struggle with a shortage of capital. So I would say it's not even a strong currency or weak currency. Country like Switzerland, you can maybe have a different argument to say that there's an abundance of capital and full employment. Well, I say, fine. Well, then you can have a different argument. But when you've got the unemployment rate like that, what we have, right, you cannot be eating your seeds. So taxing capital is an absolute no-no. No emerging market, and that especially South Africa, should have capital gains tax, death duties, or transfer duty on property, because property is where households build their wealth. And that's how the capital is raised for the start of small businesses. You raise a mortgage on your house or whatever to actually do it. When you actually tax it, transfer the transfer duties are then in fact also an exceptionally destructive tax. We're just used to it because we've always had that tax, but it's actually an extremely destructive tax. Then there are other taxes.
What happened when Ramaphosa came in? Initially, the rand, there was a lot of optimism, and the rand strengthened. It went down to below 12 rand per dollar, and from that moment onwards, it started weakening again.
Well, I think the destruction that occurred during the Zuma presidency was certainly unprecedented, and we certainly couldn't take another day of that presidency. The only trouble is the Ramaphosa presidency came in. There was a lot of euphoria, sort of thank goodness has gone. The Zuma's gone. Confidence rebounded, but we haven't seen any change in thinking and underlying economic policies. We've seen lots of public relations stunts. You go to Davos with branding and all of that. Team South Africa, everybody's on the same page, and it's a marketing exercise. But the actual underlying problems that the economy faces, the increasing throttling of the economy by government, we call the government the business prevention unit of the economy, all right? Because I call it the three ugly sisters. We struggle with three things, all right? Firstly, rampant corruption. Okay, we've seen commissions and we've seen that sort of thing, but we haven't seen the rampant corruption actually being reined in. Lots of stories, but no arrests. I think in this COVID crisis, more than 17,000 South Africans have been arrested for a simple thing like walking in the street, but not a single person has, certainly not at top level, has actually been taken to task, for effectively stealing the economy to the tune of billions and billions. The amount is phenomenal. The lost opportunity and growth probably exceeds the economy, the size of the economy itself, if we had something more competitive. But the three ugly sisters is over rampant corruption, and the reason is that affects trust and investor confidence, and business confidence, which is at an all-time low. Then there's over-taxation and over-regulation. And I use those terms very deliberately. I'm not saying taxation or regulation. I'm saying over-taxation and over-regulation. And the reason why that's so important is South Africa sits in an international community. We compete with other jurisdictions. We impose costs on doing business in this country that are imposed nowhere else in the world. So it raises the hurdle rate for investment in this country. Remember, we are short of capital. We need to attract capital from the rest of the world to solve our problems. Instead, what I think is happening in the inbred type of policy making thinking, we're not seeing any change in thinking. We're seeing it, in fact, doubling down. So absolute policy disasters like national health insurance, for instance, we're going ahead regardless of the actual crisis. So it's deepening the crisis. National health is a step change in the tax burden that we face, and we're already overtaxed. All right. And remember that overtaxation raises the hurdle rate of doing business. So to compensate for the tax rates, which are higher than other countries, you have to actually have projects and things that deliver extraordinary profits. And obviously those things are very few and far between. So we need policies to lower the hurdle rate in South Africa so that we are in fact more competitive with other jurisdictions, not even comparable. We need to now be competitive, right? And we're not even thinking of becoming comparable. We've seen under Provan Gordon raising taxes. As taxes have raised, the budget deficit remains the same and higher. In other words, it's not being sorted out. And the reason for that
it doesn't seem as if they're getting the spending under control at all.
Not only that, but we also need to appreciate that while the government is in deficit, and economists talk about the twin deficit, the fact that we've got a deficit with the rest of the world, and called the current account deficit, and we've got a deficit with the government, the tax base itself also has a deficit. In other words, households are also in deficit. There is an erosion of the household balance sheet as a result. So that means the internal resilience of the country has been eroded. And that's a big difference about this crisis that we are going into, is that the internal resilience is now gone. In 2008, if you remember, iconic corporations fell on their face. General Motors, Bear Stearns, Merrill Lynch, and leading to Lehman Brothers itself. They fell on their face. And in South Africa, not a single corporate fell on its face. And before we even see a crisis this time around, we've got corporates falling on their face in the construction sector. And we've also got the sleaze, the corruption that's at the core in the public sector, right, is now being thrust into the private sector as well. And you're seeing the KPMGs and the McKinseys and all the sleaze also arising, besides the fact that we've also got corporates falling on their face, which did not happen in 2008. And so we now face an economic crisis of unprecedented proportions. And I'll tell you why. And this is why I think the rand crash is not over. 19, we might see an interim relief, over a few months, etc. But because the rand is oversold at the moment. But at the end of the day, there is no internal resilience. Shutting down the economy is going to have an incredibly, it's a discontinuous event. So no economic models that can actually cope for it. You've still got people talking about maybe minus point this for the first quarter growth, etc. We need to be thinking of big numbers like 4-5% negative growth in the first quarter, maybe 10 to 15% negative growth in the second quarter. Remember, the whole economy has been virtually shut down. The mines, the engineering works, the retailing sector, except for food. And in that, we are also seeing weak balance sheets, unable to actually say, well, let's try and pay our employees through this period. It's not happening, right? So even when we turn the economy back on, people will not have money in their pockets. And a lot of people are not going to come back to jobs, all right? A company like Edgar's, if they do not get a bad bailout, they will not open their doors. It's really as simple as that. They don't have the cash to. And that's the difficulty that the economy faces. So when we look at another economy, like the US economy at the moment, which went into this corona crisis on a very strong footing with employment at 3%, unemployment at 3%, it's now estimated that unemployment could rise to 10% in the US. All right, but they put it together at $2.2 trillion support package, which is putting money in people's hands to help them, go through this particular crisis. In South Africa, we're still tinkering around with race-based sort of rubbish. We're not pulling together as a nation to say, how can we actually support this economy and actually make sure that it starts up on a fairly robust basis. It's not doing so. It's like taking your dog to a dog fight, but you keep your dog on a leash, right? It's not to work. You're going to actually be decimated. So we can go from 29% unemployment to 35, even 40% unemployment. And we're not going to see a strong recovery after that because we don't see the thinking, right, in government to actually say we need to make our economy competitive and actually take away the obstructions and the overtaxation, the over-regulations that we've got. And we're not prepared to do that.
Now, do you think there's going to be a knock-on effect from the weak rand on prices, like that we would have a stagflation type of a situation where prices would rise, but the economy would remain weak?
Very much so. We're going to see a stagflation of note because a lot of companies now have had their costs are still there, their rentals and all the rest of it are there, but their sales aren't. So we're going to actually see price adjustments from that point of view, and people won't have the money in their pockets to actually deal with those price hikes. And of course, a lot of our stuff is imported. We import. We've got a current account deficit and a trade deficit, and we're going to be importing stuff that is going to end up costing us more. Fuel will cost us more. I know we're seeing a big reduction next week, but that's because the global price of oil came down. But that's at the bottom. Once that starts to rise again and the rand continues to rise, the fuel prices are going to go up. Everything that we import, cell phones, the manufactured goods, all of that is going to be going up in price. Car prices, all of that is going to start going up quite significantly.
So what, in your opinion, would turn the situation around? I mean, if we had, an ideal government or an ideal finance minister, what could turn it around?
Well, I think if the government's response to the COVID coronavirus was as robust for the economy, and we had constructive thinking in the economy, because we can turn it around very quickly, because the economy, as I've said, has huge potential. The stuff that needs to come into existence to solve our unemployment problem is enormous. It's an enormous opportunity, and that is for people to invest. We would need to, in an ideal world, you'll have somebody who would take the leadership and say, to hell with the destructive influence of the SACP and COSATU, etc. We actually now need to do the following. We need to put the mining industry back on an investable footing. So we need to actually, and this we need to actually do immediately as an emergency, because at the moment we see the economy has actually shifted. I think 2-3 years ago, South Africa was still saying, how can we attract additional investment to lift our growth rate from less than 1% to maybe 2 or 3%? You wanted to attract investment. Right now, South Africa is battling to even hold on to its existing investors. Right. So you need to actually say, right, how do we actually do it? And you literally need a almost like a big bang approach. You need to actually come and I understand legacies, but on the BE, scrap the current codes completely and utterly, and implement rather policies that would support an expansion of the economy, similar to how the Afrikaners did it in the early 20s, right? To actually get new investment into new businesses, right? That are in fact empowered and black owned. I think that is something there, because that will actually help to solve the unemployment problem. Remember, the unemployment problem is not a white or even a colored or Indian problem. It is a black problem. It's 12 million black people that need to find jobs. And when you're only transferring the economy, there's only 2 million white people that are working. You cannot solve the unemployment problem that we actually have through a policy of economic transfer. So you actually need to say, let's make it a policy of economic growth. On the tax side, you need to scrap, and not even tinker with it. You need to scrap capital gains tax. You need to scrap the dividend tax, which raises the hurdle rate. You've got to scrap all these funny little levies that get charged onto payroll this and turnover that and that sort of thing, because that raises the effective tax rate. The tax rate is officially 28% for the profits of a company, but when you start taking all these levies into account for a company that's got high staffing and low margins, their tax rate can be 60-70% when you actually look at all the money that they have to pay over, and agglomerate that and actually classify it as tax, which is what it is. We need to actually do that so that the country becomes attractive as an investment destination, right? Remember, I use a test, right? If you're standing at Heathrow Airport, right, with $1 billion in your suitcase, right, your proverbial suitcase, and you've got the choice to go fly anywhere in the world to go and invest that $1 billion, why would you choose to get on the plane to South Africa to invest that money? And we have to actually answer that question. We have to give people the reason to say, South Africa is the place to take that $1 billion, right? And we're not giving people reasons. We're giving people reasons to stand in Johannesburg and take whatever they can and fly out with whatever they can to actually invest somewhere else, right? It doesn't make sense, right? We have to look at the Mauritian and Rwandan examples, right? That's just in our own backyard to see what works. The Chilean example, for instance, that works, right? This is something that is not even vaguely appreciated by the inbred policy thinking that is taking place in our country at the moment. When we sit in a room and everybody nods and say, yes, we need reforms, and everybody agrees there's no problem, what the government thinks of reforms is radical economic transformation, a plunge into deeper Marxism and identity politics type of thing. Whereas in actual fact, the reforms that are actually needed is to actually shift South Africa to be more competitive as an investment destination. South Africa, there's no reason why anybody should come to South Africa. Our issues are important to South Africa. They are not important to anybody else. So we shouldn't be imposing our issues. And I call it our national scar. That is apartheid. Our national scar runs very, very, very deep. All right. But that national scar we care about in South Africa, but nobody else in the whole wide world cares about it. If they've got money to invest, they want to see what is the deal I get as an investor. And if we give people bad deals as an investor, but they will go somewhere else. It doesn't make sense for us to impose on investment, our internal issues. We will never ever solve our problems if we cannot bring what needs to come into existence because we lack capital and lack the investor confidence to attract that capital.
Well, thank you very much, Chris. It's been really interesting talking to you, and also the solution you're offering at the end. I hope that some of the powers that be could listen to you and adopt some of those solutions. And for our viewers, I just want to mention our logo will appear on the right-hand side of the screen. Just click on it and subscribe to the channel if you haven't done so before. Yes, you was going to say, Chris?
I, at the time, trying to be constructive, gave a submission to the Davis Tax Committee on how one can actually get growth going, especially in the small business sector. It was completely ignored because they were looking at more taxes, etc. They were not looking at solutions for the country, and that was, to me, very sad. It was a labour of love, huge amount of work that went into it, completely ignored. When Tito Mboweni asked for people's suggestions, I felt very cold. I thought, you know, we've done this before. It actually is not really taken into account at all.